Golden opportunities or barbarous relics? Today we're going to be talking about precious metals and what it can mean for your financial future. Welcome back to Rainbow Investing, where we examine a spectrum of ideas to increase your long-term wealth. So today we're going to look at precious metals. And this is a very, very controversial area of investing, but I find it very, very fascinating. So I just want to go through precious metals, why people invest in them, why people do not like them, and some things to keep in mind about precious metals. So let's get straight into it. So there are normally 5 precious metals that people discuss when talking about investing. Now the main two are gold and silver. Most people know what gold and silver are, what they look like, and maybe what they're used for aside from jewelry. Now, I'm not going to spend too much time talking about platinum, palladium, and rhodium because they come under a slightly different class of assets, but I'll talk about why that is in a minute. So these 5 precious metals are traded as investments. Now, whether these are actually investments or commodities is still a debate. But basically people buy these metals with the assumption they will go up in value in the years or months even to come, meaning you can buy low and sell high and make a profit. So today I'm mainly going to be talking about gold and silver. These are the traditional precious metals used for investment and the ones I find more interesting. Now, platinum, palladium and rhodium are all precious metals because they are very, very rare. All 3 of these metals are rarer than gold and silver, which is quite an amazing thing to think about. Now, platinum, palladium, and rhodium also have industrial uses. They're actually used for things, and that actually underpins much of their value, particularly palladium. Palladium is used a lot in electric batteries, so people think that with electric cars taking off, the demand for palladium will go through the roof, and so therefore the price. That is more of a speculative guess, in my opinion, than anything else, but you know, they've got a point. So look, if you're really into palladium, for instance, maybe do some research on palladium. The other thing to remember about these metals is they're very, very attractive to look at. There are other elements that are rarer than these, but people like these metals because they're shiny and they look great, basically, as well as having those industrial uses. But let's get into gold and silver. So the reason why people like gold and silver fundamentally is because they were used as money in the past. They're almost the original forms of money. Ancient civilizations have used gold and silver coins dating back thousands of years, and they have always held their intrinsic value within the human psyche. I mean, gold and silver are just really nice to look at and really nice to own. Let's be real. But does that mean we should be looking at them today? Well, that's a very interesting point. One of the biggest fund managers in the world and one of the most respected investors is a guy called Ray Dalio. And he says that anyone who dismisses gold understands neither history or economics. So this is a guy who runs an asset management business that has over $200 billion in asset managers. He's one of the most successful investors of all time, and he holds between 5 and 10% of his portfolio in gold. Warren Buffett, another hugely famous investor and one of the most successful investors of all time, has held silver before. There's a reason for this. One of the most well-known reasons for investing in gold and silver is that they have an inverse relationship to many other investment assets, particularly shares or stocks. Now, because gold and silver are tangible physical assets that really have been proven to pretty much hold their value over time, people actually flock to these assets in times of share market distress. So for example, in the global financial crisis in 2008, the gold price actually rose and rose for a few years after the crisis. It's only started to come down many years after the crisis has really abated. The same with silver. Now that's why people really like gold, is because they have that inverse relationship. People invest in gold as a kind of insurance policy against shares or other assets that are more volatile in nature. So basically the idea is if you hold gold and shares, your shares, if they go down, if there's a period of global turmoil, the gold price will rise. And gold also reflects a lot of geopolitical tensions. If you guys remember last year, there was a lot of tension around North Korea firing missiles. During that period, the gold price went up quite a lot because people view it as such a safe asset, a safe haven for their money, that if there's any sign of global tensions, they view gold as a safe place to invest in. Now, because gold and silver were the original forms of money, A lot of people think that one day the world will go back to those forms of money because the qualities of gold and silver actually make them quite uniquely valuable as a currency. The supply of both metals is quite finite. The amount of gold that's discovered and mined in the world every single year would barely fill a small apartment. The global supply of gold is very, very stable. There's not a lot of it. And that provides a really effective way to run a currency because people just can't go out and print more gold or dig up more gold. It's very, very rare. And it's the same with silver. So there's a lot of people who think that if the current financial system undergoes a period of severe restructuring or trauma, gold will emerge as a very valuable commodity to hold because any future monetary systems that might replace a collapse might be based on gold because it's the best, the most stable metal to form a basis of a monetary system because of that supply characteristic, which hardly any other thing on earth has. That makes gold really special, and that's why a lot of people still really like it as well. Final thing I want to say about gold is that many people use it as an inflation hedge. Now, in my last video, I talked a lot about inflation and actually about gold, but because gold supply is so stable and the demand for it is also quite stable, it actually makes a really good investment to hedge against inflation. So many people believe that the gold price will always reflect its intrinsic value no matter what the inflation rate will be. So if the inflation rate is 10%, the price of gold will rise by 10%. And this pretty much has stayed true if you look at the last 50 years of history. The gold price has always risen as the supply of money has increased. Because if the supply of the gold is stable and the demand of gold is stable, its real value will be reflected in whatever the currency value of the day is. And that's another reason people really like gold. So just keep this in mind. If gold reflects the amount of money in circulation, the gold price, after the last global financial crisis, the US federal government injected $4 trillion into the US economy. Think about that for a second. $4 trillion. So if gold is really dependent on the amount of money in circulation, that's definitely something to keep in mind. So the last thing I want to say about gold is that simply people will always want it. We humans are just intrinsically attracted to gold for some reason. Throughout all of human history, there has been gold. The Egyptians had gold. They buried their kings with gold. It seems to be part of our nature as human beings to just love gold. And therefore, the demand of it will never really go away. And that's another reason people really like to invest in it to this day. And it's the same with silver. So there you have it, guys. A brief introduction to gold and other precious metals. I hope you liked this video. I certainly liked making it. I'll be back with some more videos soon, as always. But for now, good night.